Gurmeet, very good morning. And let me just start with that specific point. How big a deal is the distribution of portfolios for the market? That news is expected to come sometime during the day today. And what will be the key portfolios and the allocations that you'll be watching?
Hi, Tamanna. I think it's a more of a sentimental event in terms of portfolio allocation, unless we see very big surprises. If you see the pecking order yesterday with senior ministers taking oath, I think change looks a little unlikely. I think the key focus for a market point of view, obviously the broad sectors which are roads, infra, etc., which I think should be on steady lines. There are some news of finance portfolio being undertaken. While I think Nirmala ma'am has done a great job and steadied the ship even during COVID, being prudent with even fiscal stimulus. But any change in terms of in that portfolio with out-of-box thinking, the various names going around the corner, I'm not aware of that. But if let's say there is a Piyush Goyal or somebody like a Gadkari taking care of finance portfolio, market may want to see that and they could create a near-term thing. But I think what market broadly seems to be okay with is the balance. If you see of all 72 odd ministers who took oath, BJP was almost 61. So that fear of allies trying to get a plump portfolio, policy making getting slowed down for now looks settled in my view. And I think that's a broader medium-term, long-term message markets would be more keen on, which is continuity and not enough populism but continuity in reforms. And a bigger event is the 100-day agenda which the government announced in lead up to the budget. I think those are more near-term figures. I think announcements on portfolio could have a 1 or 2 day impact at best.
Right. So the 100-day agenda is, and that's an important point, Gurmeet, that the 100-day agenda is what the markets would be looking at. Just markets come off a bit from its highs right now, mildly negative territory, and I suppose that range-bound trade will continue. Do you have a concern with the way we've seen a run-up and, valuations at these levels? Or have we now set the stage for the next leg of this bull run in the next sort of 5 years?
No, I'll agree with the latter. I don't think so. Market is at a level where we all should be concerned. We were 22,600 pre-exit polls, and then exit poll exaggerated the move, and then the election day, course corrected it, and now we are back at near all-time high, which is 23,200, 300 levels, and you are still at about 18 times. I think you have to look at it from a valuation perspective rather than from a level perspective. And I think 18 times is slightly above our long-term average, but it's not that we are in a bubble zone. Yes, there are pockets of exuberance, Tamanna. I honestly don't see PSUs trading at 60 times, just going up on order book. Similarly, there's a lot of euphoria in the listings in the SMEs and in micro-cap space. There is some exuberance in even some of the railway stocks. You can't discount. It seems that the next 5, 7, 10-year news is in the price. So you need to differentiate there, right? So for example, let's say, I'll pick a name, let's say HAL. You have, let's say, a 1 lakh crore kind of an order book, of which 35% is the Tejas MK1, which is a very long-term contract. So that order book looks sustainable. And if you break it up, and let's say HAL is about 65%, maintenance and spares revenue. So there's a bit of continuity as far as even cash flows are concerned. Even then, the run-up has been very sharp. But there are a lot of names which have just run up just because there is a euphoria on defense. And I think that's the pocket you have to be a little careful about. But I don't think so the broader market has any signs of seeing a very large corrections only because of valuations.
Gurmeet, good morning, Neeraj here. Does the set of stocks that you would have in either a tactical portfolio or your long-term portfolio change, get enhanced from what they were, or get reduced in terms of weightages from what they were because of this event or because of what's happened in earnings?
No, that's an excellent point, Neeraj. So we are rotating a little bit. As I said, we are not exiting a defense or a railway or a PSU portfolio, but we have slightly managed concentration there. Some of our defense stocks, like let's say Solar Industries, Zen Technologies, had run up quite sharply in last 1.5 years. We just brought down the weightages back to let's say 5-6% for solar, which had went up because of the appreciation almost at 9-10%. Similarly, for some of the other defense and railways, we are just trying to manage the concentration risk there. And we are now trying to move towards sectors which I think the earnings can, positively surprise. So one is financials. In my view, I think it's long due. If you see last 2 years, the EPS growth is 25-26%, and the growth is only 12%. It's largely because of FPI selling. And I think at some point of time, that selling has to abate. They're already at what, 16% holdings already, which is a decadal low. So we're increasing weightages there in likes of, let's say, ICICI, HDFC, going to even tier two banks like Federal Bank, where we think, the cost income ratio is improving. The wholesale retail mix is now like 55-45, used to be heavily in favor of wholesale advances. The CASA mix is also being worked upon with more branches. They are at 1,500 branches. So adding financials there. Similarly, we are trying to see if we can add a little bit of agrochemicals and more rural focus, because I think that's going to be a key focus area. If you see the farm GVA in the last quarter GDP print was just 1.5%, which clearly means that there is some bit of distress there, which is evident in the way even the government performed in states like Maharashtra, in states like UP, where you have a rural economy. So I think we want to get in there, have some more weightages to FMCG, the likes of the Tata Consumers of the world. Also get into some slightly farm equipment and discretionary consumer place, and add bit of housing more. I think that's something which, in my view, will be a key focus area for the budget. Housing finance companies haven't done that great in last 1 year. Whether it is a Home First, whether it is some of the other housing financiers, I think that could get a bit of a leg up with budget and some more announcements. Also, I think this Bajaj Housing IPO can re-rate some of the other names also, just in terms of valuations. Like, let's say, for example, a PNB Housing trades at 1.2 times with great, metrics, what you look for in a housing finance company. So that's what we are trying to do, maybe about 10-12% of the portfolio.